Off the March shock, the Keefe, Breeds, and Wood index, I'm stunned by this. Off a dead cat bounce is up all of 4% off of the middle of March shock. I thought it would have done much better. Why are the broader indexes of banks, why is it lagging?
It's lagging mainly because the market's unsettled about what the earnings is going to be for the regional banks and for the banks. And there's a reset underway. The first reset is around net interest income and what's happening with deposit costs. I thought it was very interesting that when you looked at the big bank earnings on Friday, which were actually pretty good relative to expectations, the stock still went down across the sector. And it's because the view is that we're not there yet in terms of understanding how this remixing is happening in deposits. Some of the good news is that we're really not seeing big shoes drop on credit, but that also continues to be a concern. So I think, KBW for our 2024 estimates for banks, we've cut estimates 20% in the last 6 months. And I think investors want to know, when is that going to stop? When is this reset to profitability going to stop?
Could you help us understand just the size of those banks? When you come out with a number like that, 20% drop in estimates.
It's all the way through the industry. All the way through that's up and down.
Small to large, just up and down.
So
right
just
across.
if I were to talk about dynamics, if you're just a spread income lender alone, you have more pressure. But don't forget, we think this second quarter is going to be a very difficult quarter for investment banking. They did maybe a smidgen better than we thought, but still, let's just say down 20% at least year over year. Now, we're seeing green shoots in investment banking. That's only about half a dozen or so companies where that really matters. The other banks are just feeling the full brunt of the spread compression, which also impacts the bigger banks, even though the biggest banks are faring better.